Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. The Plnhf 13. It's struggling along with a lot of the other MJ stocks, and this one's got its own unique problems. It's got its own unique opportunities. We're going to talk about the third dispensary being opened in Florida. And as you know, they've got a big license down there. We're going to talk about that. Then we're going to talk about the elephant in the room, which is the stock-based compensation. Still a problem. Imagine that. I'm shocked. Now, first, let's talk about what's going on in the world. We know the market sentiment is terrible. The market has really been struggling. It's up a little bit today because it looks like Chairman Powell's probably going to go up by 3/4 of a point as opposed to 1/2 a point to try to dampen down this inflation that's completely out of control. I've been telling you for the last several months that it's about 12 to 15%. That was even back when it was 4%. Well, now it's 8.6. It's higher than that. Wholesale inflation came out at 10.8 yesterday, so I know it's higher than that. It has to be higher than the wholesale inflation because you got to have a little markup on top of it. So it's probably in the 12 to 15, but so be it. It is what it is. We also know retail sales were down. We're down last month, so looks like we're heading into a recession. We all know that. That's where it's headed. But it is what it is. That's kind of what the Fed's going to have to do. They're going to have to put us into a little bit of a recession for sure. They're going to try to make it as shallow as possible, but that's where we're headed. This is not good for the market, and Plnhf 13's been getting hit along with all the other penny stocks, and it's just bad out there.
This sucks more than anything that has ever sucked before.
Yeah, it definitely sucks. Now we're going to talk about the Plnhf. Let's get into what all's going on with it. It says Plnhf announced their third Florida dispensary. It's located in Ocala, Florida. It says we've thoughtfully and deliberately executing our Florida roadmap. Now remember, they paid $50 million for a license to be able to sell MJ in Florida and to have those dispensaries. So understand that $50 million is a ton of money, but here's why it's so much. Because you can put as many dispensaries in the state of Florida as you want with that license. So yeah, it's $50 million bucks, but you could have 20 dispensaries if you want. So it's not as bad as it sounds. So I think they see Florida as a huge expansion area, especially with the travelers that go there every year and what they think the future plans of MJ will be. Since this is their third dispensary location, they initially had 6 neighborhood dispensaries targeted towards major Florida population centers with underserved local residents, said the co-CEO of Plnhf 13. Says, we look forward to serving patients in Florida and showing them why our products are the most popular in Nevada and why our in-store experience at both the superstore and the smaller neighborhood dispensaries are some of the highest rated. It says the Ocala location's densely populated, busy retail corridor across from the Walmart Supercenter, IMAX Theater, etc. So they're going with the neighborhood store as opposed to the big giant superstore. They went with that in California, and I don't think it's worked out as good. Maybe they should have gone with a neighborhood store out there. They spent a lot of money, and there's a lot of competition. So I think they're learning to, hey, you might want to go with something a little smaller in these other locations and try to find areas that are underserved. So that makes a lot of sense to me. Now, the balance sheet is still real good even after all the money they've had to spend on licenses and building stores. They're sitting there with $62 million in cash. They've got a $270 million total assets, and their liabilities are really low. They only owe $41 million, so that's an incredible balance sheet. It's fantastic. I could not be happier with that. But now we're going to get into the crap that pisses me off. Now here you see their first quarter, they did $25 million, net gross profit of 12.9, but general administrating of 13 million. And then depreciation of $2 million. I'm not worried about the depreciation. That's a non-cash issue. But there used to be a category over here called share-based compensation. It's no longer on this profit and loss statement for some reason. I think it's included in general administrative. Interesting. So now you've got to go down to their general administrative where it showed 13 million, and then it breaks it down for you. And there's share-based compensation right there, $2,055,000. And the year before it was $200,000. So we've got a 1,000% increase in share-based compensation, which is really hurting their GAAP profitability. And why it went up 1,000%, it continues to be, way above the year before, I don't know. It's never spoken about in the earnings call. And see, you go back a year ago, or any quarter really before, and there it sits right there in the profit and loss, and their share-based compensation. See, it's broken down, $203,000. I guess when it goes up to 2 or 3 million or something like that, you want to put it on another sheet of paper down way below where the profit and loss is. That way you may not recognize it.
Where? Right there!
Yep, it's right there. I can still see it. So share-based compensation's a problem. Hopefully they'll get a hold of this thing, because look, we don't need something messing up the GAAP profitability of this company. It's not helpful. And here's why it's important. Look at this thing. Okay, they're showing a $3.7 million loss. Okay, we know $2 million of it's share-based compensation. Another $2 million of it's depreciation and amortization. Neither one of those are cash flow issues. Those are non-cash issues. So really, it's got positive cash flow. Understand that. But when they do all this stock-based compensation, we get diluted, okay? So it does matter. We get diluted, and it messes up the GAAP profitability. And if you look further down, the total loss for the period was $2 million. Well, what was the stock-based compensation? $2 million. So this would have been a break-even quarter if not for that, plus a $2 million cash flow positive on top of that from depreciation. So it's very important. And the thing about stock-based compensation, it's very addictive for folks at the top, because, you know, that's where most of it goes. And I know people like to say, oh, well, they spread it out to the bud tenders and all. Okay, whatever. They need to get a hold of the stock-based compensation. Same problem with Plnhf. Got the same issue. The top dog's taking a little too much off the top, and they need to start thinking about the shareholders a little bit. I like this company. I like what they're doing in California with becoming vertically integrated. I know they're being able to sell their own products soon, because they bought a company out that can allow them to, again, be vertically integrated. Same thing in Florida. So they've got good plans. I like the store out in Vegas. It's amazing. I think this is going to be a successful company long term, but this is not the time for a bunch of stock-based compensation, because this is a lean time and it's really hurting the shareholders in a significant way. You know, they need to get some help with this.
If you're doing it, stop it. Get some help.
And here you can see this stock. See how much it's fallen down. It ran way up, was doing great. And like I say, the combination of the market collapsing, MJ really getting hit, and then they've got this stock-based compensation problem. And let's do a little chart analysis here. Let me show you something. Let me show you exactly what this is sitting on. This support goes way, way back. Actually, it hit back in 2019 on this support, and you can go all the way back to January of that year. So it's sitting on some pretty strong support there. There is additional down here to buck, which would be, that's just getting crazy low. But it is sitting on support right here in that $1.40 area, $1.45. So, you know, this chart analysis does matter. It gives you a reason, you know, why would this be here? Well, this is why. You can see the many times where it's been on that support. I did notice that the stock-based compensation was a little bit lower this quarter than last. As you can see right here in the third, I believe this was the third quarter. Let me double check. Yeah, this was the third quarter. And right here you see share-based compensation. It got as high as $6.6 million. So it is coming down. That should make us feel better. I'm still irritated that it's up 1,000%, but at least they are getting some control of it. But this $6.6 million in the third quarter, I mean, I was going crazy over that. It's like, you got to be kidding me. It's just getting out of hand. So they are appearing to get it somewhat under control. It's still too high. It's just too high, given the circumstances, but at least that is an improvement, and I will give them a little bit of credit for that. All right, folks, and that's at least ending on a little bit of a positive note. It is coming down, thank goodness. That stock-based compensation really gets me irritated. I'm dealing with the same thing with Plnhf. They recognize the problem there as well, and that's a good company that's cash flow positive as well. But like I say, that's a salt in the wound one for sure. Anyway, that's Planet 13 today. I know everybody's upset. You're probably really down on this stock, and I understand it. It's like a lot of stocks out there. I mean, if you own Netflix right now, a FANG stock, you're furious. So, you know, try to hang in there best you can. And if you like this content, be sure to hit that like button. Lets me know to continue to cover Planet 13. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And we'll see you next time on Mr. Frugal Investor.